the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Black gold is running the world. I'm sure everybody's paying attention to what is happening in the oil markets. And yes, over the weekend, we did see oil go to over $100 a barrel. Let's talk about the bets we're making to capitalize.
Welcome to the simple side. Market beating picks inside. There's no jargon and no time to waste. Join the simple side and end up in first place.
All right, guys, welcome back to another weekend newsletter, a weekend update from the Simple Side. Of course, we usually call this the Saturday send out, but it doesn't always come out on Saturday. This week, I had some folks in town and just busyness, so I wasn't able to send out on Saturday. So we're coming at you late on a Sunday. And before we get into anything, I just want to throw out the reminders that I always have. Copy trading available on autopilot. Views of the portfolios and investments that I have, macro indicators, research reports, all of the above are available on our website. It is thesimpleside.news is where you can find everything there. The newsletter, of course, is available at thesimpleside.substack.com. So, without any further ado, let's talk about a bit of what is happening in the world. Of course, if you want a bunch of updates on the oil market and what's happened and how it affects you and all of that good stuff, you should go and listen to last week's newsletter or read through last week's newsletter. I don't want to do it all again because we've done it once. Go check out what's over there. Most of my views haven't changed since that newsletter. And I think all the information is still very relevant. I'm not talking about the war in particular, more just about the, financial or economic or market impacts that we're seeing from oil being shut down. And so, don't look for any kind of political or war updates from me. I am not a war expert. I don't have those updates, but I do understand supply and demand, so I can give you some updates there. I also have another person or quick, I guess you would call it a podcast to go listen to. Anything that Doomberg has put together, you should go pay attention to. Anything that Doomberg has done, you should go pay attention to. He is, / their group is a very talented analyst group. They are quite often very right, if not exactly, usually directionally correct. And they just have some ideas that I would never produce by myself. And one of the tricks of investing is knowing what you're good at and what you're bad at. I know that there are people better than me at understanding energy and the effects and the implications. And so I turn to them when I am looking at investing in the energy markets. Doomberg is one of those voices that I turn to. With that being said, we have made a few oil bets over the past few weeks, and there's really, I think 4 or 5 overall that we've made, but the main 3 that we have are up about 12%, 13%, and 10%, at least in those ranges over the past week or so. And I'll give you some more exact numbers down below quickly, just for paid subscribers, though, on all those individual tickers. Like I said, go read last week's newsletter if you want updates on what's happening in the oil world. I will say that in 18 months, I do believe that oil is going to be lower than it is today. If you want me to give you hard numbers on that, I would say that oil is going to be down below $90 a barrel and likely below $80 a barrel. With that being said, I think we're absolutely on the verge of an energy crisis right now, but I don't think the U.S. is going to be affected as adversely as people think. I threw some quick quotes into the newsletter here, but basically, our energy consumption in the U.S. is about 20.5 million barrels of petroleum products a day. Now, that is from 2023, 2024, so it's probably up from there. But at the same time, our total petroleum production in the US is about 21 million barrels a day. So, in general, if you assume that we're consuming the same amount of oil as we produce, that's basically the assumption that I'm making when I say I don't think the US is going to be as affected as poorly or as much as people think. We basically produce what we consume. And so if oil really started to get out of hand, I think what you'll see the US do is start to restrict exports or start to put some sort of, I guess, domestic price control on what things can be sold at in the United States. I mean, we all know energy and oil specifically drive the world. So I just don't think the government's going to make any sort of allowance, if you will, for oil to just go to crazy levels like what people are calling. I'm hearing a lot of 150 a barrel, 170 a barrel, 200 a barrel. I don't think that'll happen. If it does happen, it won't be sustained. Maybe we'll go up and we'll touch a number like that, but it won't be sustained. You have to understand that policymakers are extremely incentivized to keep that number low. And when you're incentivized and your pocketbook is basically unlimited and you have unlimited control over law and regulation, you will always win. So, I'll go and complain about that as much as I want, but we're always going to lose out to those that have unlimited money and control over basically everything that happens policy-wise. Now, one of the things that I was recently talking to a colleague about was potentially making a bet on natural gas. Typically what you'll see is natural gas will follow oil in the long term to a price point. Obviously they don't trade at the same value in the futures market, but let's say oil is trading for $1 and then what happens in the Strait happens and oil goes up to trade for $10. What you'll see in the short term is the prices for nat gas kind of stay at the same level, stay where it's at. But eventually in the long term, if oil stays at that sustained price, you'll see nat gas kind of bump up to that sustained price as well. The issue with that right now is that when we're drilling for oil, we're typically, co-drilling, if you will. We're generating both nat gas and oil from the same wells a lot of the time. And so what we're witnessing is this kind of oversupply of nat gas that's being built up and generated. And I don't think there's a lot of places for us to go and sell. The demand for nat gas hasn't really started to pick up in any way, shape, or form. And I think the nat gas trade is coming. It's just not quite here yet. If we see nat gas end up dropping down below certain levels because we pick up oil drilling, therefore we also generate more nat gas, but the demand for nat gas hasn't picked up. What we're going to see is, potentially nat gas go down in value even more before the big jump up, which I do think will create an opportunity at some point here in hopefully the near future. If I see futures drop below $2 or get even lower down below $1 or anything of that nature, or down close to $1, I think that's going to be a place where you'll see us start to trade futures or go long nat gas and potentially go short oil at the same time, just as the potential, supply and demand start to shift in those two markets. Let's see, what else do I have for you today? Oh, quick allocation update. We're about 50% invested in our portfolios. That's, the flagship fund, tech-focused growth, AI secondhand effects. About 25% is invested into our oil bets that are kind of on the side. And then our final 25% is just sitting in high-yield savings, treasuries, that sort of thing, probably making an average of 325 to 375, call it 3.5% annually, or an annualized number on those. Just some quick returns updates. Our portfolios are down about 10% on average, or at least the allocation that I have is down about 10% year to date. Obviously, that's about 3% worse than the S&P 500, which is down 7%. So again, 50% of our portfolio down 10%. In the world of cash, 25% of it is sitting there, and we're probably up about 0.8% on that so far. Every quarter is I guess a little less than call it 1%. So that's one of the things that we're looking at there. So up about 0.8%. And then, of course, we have our final 25%. That's in those one-off bets that I've been talking about. Again, majority of those in oil. And we're averaging, I would say, a 10% return with those. So the overall portfolio, again, 50% of our investments are down 10%. 25% of our cash, our quote-unquote investments is sitting in cash, which is up 0.8%. And then our one-off bets, again, 25% of our portfolio is up 10%. And so if you average all that stuff out, the overall portfolio for 2026 is down about 2.5%. And having a loss of 2.5% while the market sits at negative 7% doesn't bother me at all. I think there's a lot of people out there who are struggling much worse. I saw a lot of people take huge bets in Amazon right before the market kind of started to turn. And I haven't looked at the price of Amazon, but I'm sure that they are struggling much worse than we are, especially since I haven't seen them take any directional bets on oil. So interesting things there for them. But of course, for us, portfolio in general, not looking too terrible bad. I do think the oil bets we have maybe 30% upside on average over the next couple of months, assuming we see sustained higher than normal oil prices. And last but not least, just a quick update on our monthly stock picks that we sent out this month. We're going to close those on the 31st. We're going to open up new ones in April. Right now, I only have 2 names that I like, so we're going to open up those 2 in April. But in general, those are down about 0.34% this month. So I would say outperformance over the S&P 500, but underperformance in terms of actually making gains. So frustrating, but overall, if you're beating the S&P 500, it's hard to complain about. One of the things I would like to hear from you is how you would like these portfolios and returns to be displayed. We have a lot of things that we offer, and I want to be able to show all of them to you in kind of like one snapshot. So if anybody can think of a way to display that in a great or a good-looking way, please reach out, let me know. I'm happy to build that for you. I like our website and all the different tabs and things you can go look at, but I think there's just a better way to do it. And I would love to hear from the consumer about what they would like. It's different for me when I'm the actual person going out there to find these stocks and make my investments. I kind of want to look at different things than what you might want to see on your side. So let me know. Paid subscribers, next part, is for you as always. I talk about our 4 main oil bets, so go look at those, and then our average return there, which between those 4 is about 13%. You'll notice this is different than what I talked about before, which is an average of about 10% or 11%, something like that. That's because one of the stocks that we like is over-the-counter. Can't be traded by everybody, obviously, unless you have a brokerage that lets you trade OTC. And then, of course, we have our other minor bets. Those are down about 5%, which doesn't surprise me, but one of them is holding up very well in the market. And I like that because it's making me feel verified in the thesis. If it's holding up in a very bearish market, there's likely a reason for that. There's probably some kind of buying pressure underneath that we can't see. So I think that bodes well for that company, and we might end up putting a bigger position into that company if the opportunity presents itself and we start to see the market kind of turn back positive for us. Weekly picks this week kind of focused on oil names, 2 names from our monthly picks or upcoming monthly picks. And I cannot believe I'm saying this, but we're up 92% on those weekly picks since we started doing this over 89 weeks ago. 89 weeks ago, 92% returns, 1% a week. ridiculous levels of outperformance, up over 77% in outperformance over the S&P 500. Incredible stuff there. And guys, that is all I have for you this week. I'll be seeing you next weekend and potentially sometime in the middle of the week this week, just with some general updates. I think April 7th for us is a big day in the markets. We have a stock reporting on some stuff that will matter a lot. That'll affect the position a lot. So be on the lookout for information about that from me. But until then, stay safe. Watch the markets right now. Don't sell into fear. Yes, things aren't great, but they aren't always great. And that's okay. And I will be seeing you next week.